Most investors spend their time watching the same crowded trades, big tech, trending AI stocks, and names that already dominate headlines. But historically, some of the strongest returns come from companies that are still flying under the radar while quietly expanding inside large, regulated industries. Today's stock fits that exact profile. It's a small-cap NASDAQ company that's scaling rapidly, posting strong revenue growth and positioning itself at the center of the global shift toward cleaner and more efficient shipping. That company is Uni-Fuels Holdings, and despite impressive operational momentum, the stock still trades like the market hasn't fully noticed what's happening yet. Uni-Fuels is a fast-growing global provider of marine fuel solutions, helping shipping companies source and optimize fuel procurement across international markets. Founded just a few years ago, the company has already built operations across major shipping hubs, including Singapore, Dubai, and Seoul, with expansion plans moving into Europe and the Americas. While it only went public recently, Uni-Fuels has evolved quickly from a small regional player into a global operator serving vessels of all sizes, from cargo ships and tankers to offshore service fleets. What makes this story especially compelling is the broader industry shift happening right now. The global shipping sector moves roughly 90% of world trade, but it's also under intense regulatory pressure to reduce emissions. International regulators have introduced aggressive carbon reduction targets over the coming decades, forcing shipping companies to adopt cleaner fuels, improve compliance, and track emissions more closely than ever before. This transition is creating a massive new market for sustainable marine fuels, compliance services, and optimized fuel procurement, exactly where Uni-Fuels operates. Industry research suggests the sustainable marine fuel market could grow from only a few billion dollars today into hundreds of billions over the next decade as regulations tighten and cleaner alternatives become mandatory rather than optional. For fuel solution providers that already have global infrastructure and customer relationships, this shift could represent a long runway of growth. Uni-Fuels has been moving aggressively to position itself for this transformation. One of its recent strategic expansions includes offering European Union emissions allowances to help shipping companies comply with the EU's Maritime Emissions Trading System. Under these rules, ship operators must now purchase and surrender carbon allowances to cover verified emissions, a system that becomes stricter each year. By integrating compliance tools directly into its fuel solutions platform, Uni-Fuels is turning regulatory pressure into a recurring business opportunity while strengthening long-term customer relationships. The company is also actively scaling its global footprint. Management has outlined a multi-phase international expansion strategy focused on opening new offices, increasing port coverage, and exploring acquisitions that align with long-term growth objectives. In addition, Uni-Fuels recently secured a multi-year marine fuel supply agreement with a major offshore energy contractor in the Asia-Pacific region, adding predictable volume and long-term revenue visibility.
Financially, the growth trajectory is already visible. Revenue has surged sharply year over year, climbing past $100 million in just the first half of the current year, far exceeding prior annual totals. Transaction volumes are increasing, port coverage is expanding, and gross profit continues to trend upward even as the company invests heavily in scaling operations. While margins are still developing, this is common in rapidly expanding logistics and commodities-based businesses, where scale improves profitability over time. Just as important is the balance sheet. Uni-Fuels has strengthened its financial position significantly, growing shareholder equity and maintaining healthy cash reserves while keeping liabilities manageable. This gives the company flexibility to fund expansion, pursue strategic opportunities, and navigate commodity price fluctuations without excessive financial stress, something many early-stage growth companies struggle to achieve. Although large Wall Street firms have not yet widely initiated coverage due to the company's small size, independent research groups have taken notice. Some analysts believe the current share price does not reflect Uni-Fuels' revenue scale, growth trajectory, or long-term cash flow potential, with valuation targets several times higher than today's levels if expansion continues as planned. Of course, this is not a risk-free investment. Uni-Fuels operates in a competitive industry tied to global trade cycles, fuel price volatility, and regulatory changes. Profit margins are still developing, and rapid expansion always carries execution risk. But what makes this story interesting is the combination of accelerating revenue, strong industry tailwinds, regulatory-driven demand, and a business model built around recurring global fuel flows. In many ways, Uni-Fuels is positioning itself as a key infrastructure provider for a shipping industry that is being forced to modernize quickly. As sustainability regulations tighten and compliance becomes more complex, companies that can combine fuel sourcing, logistics, and emissions solutions under one platform may become increasingly valuable. So the real question for investors is simple. Will Uni-Fuels continue scaling into a global marine fuel and compliance powerhouse, just as the shipping industry undergoes its largest transformation in decades? Because if it does, today's valuation may look extremely small in hindsight. Let me know in the comments what you think about Uni-Fuels and the future of sustainable shipping. And if you found this breakdown helpful, don't forget to like and subscribe for more early-stage growth stock analysis.